There's a lot of confusion in the market about what's happening with day-to-day movement in mortgage rates right now. Here's what you really need to know. Compared to the near 8% peak last fall, mortgage rates have trended down overall. If you're looking to buy or sell a home, this is kind of a big deal. While they're going to continue to bounce around a little bit based on various economic drivers, kind of like inflation, reactions to consumer price index or the CPI, don't let the short-term volatility distract you. The experts all agree that the overreaching downward trend should continue this year. While we don't see the record low rates homebuyers got during the pandemic years, some experts do think that we should see rates dip below 6% later this year. As Dean Baker, he's the Senior Economist Center for Economic Research, says, they will almost certainly not fall to pandemic lows, although we may see rates under 6%, which would be low by the pre-Great Recession standards. Baker isn't the only one saying this as a possibility. The latest Fannie Mae projections, they also indicate that we should see a rate below 6% by the end of the year, as seen here in the green box. The chart shows that mortgage rate projections for 24 from Fannie Mae. It includes the ones that came out in December as it compares to the updated 2024 forecast that they just released a month later. If you closely look, you're going to notice that projections are on the way down. It's normal for experts to reforecast as they watch the current market trends in the broader economy. But what this really shows is experts are feeling confident that rates should continue to decline as long as inflation cools. But what does all this mean to you? Remember, no one can say for sure what's going to happen and when, but with short-term volatility, it's to be expected. So don't let small fluctuations scare you. Focus on the bigger picture. If you've found a home that you love in today's market, especially where finding a home that meets your budget and your needs can be a challenge, it's probably not a good idea to go ahead and try to time the market and wait until rates drop below 6%. With rates already lower than they were just last fall, you have an opportunity in front of you right here, right now. That's because even a small quarter-point dip in rates gives you a much-needed boost in your purchasing power. The bottom line is this: if you wanted to move last year, but you were holding off hoping rates would fall, now might be the time to act. Let's go ahead and connect and get that ball rolling for you.